Good morning, trades investors, and welcome to the TradeLink weekly report for 13th of October 2014. As we are talking about finance, I must inform that all advice is of a general nature only and must not be construed as personal advice. Past performance is no guarantee of future result. So let's talk about the week that was, and on Friday we saw another sell-off that took our index down to levels we haven't seen for quite a while. In fact, we've seen a near 9% correction on the market since late August when it actually peaked, and that was at 56.80. We've now seen it hit a low of 51.87, so around that 9% mark, near that psychological 10% correction mark, which is seen as still useful within a bullish market. Quite a buying opportunity, but if it starts pushing to more than that 10% correction, then that's where we start to look a bit more bearish in a broader sense. Still a lot of volatility in terms of price movements in the market, which has impacted on our trades a bit further. We're still in Newcrest though. It is quite tedious there at 964. Gold was up over the weekend a little bit. There you go, back to that. Gold was up a little bit over the weekend, but not enough to... what do we have? We've got gold spot up $2, so it's a modest move there. Hopefully that can keep the trade floating in our area that we want it to. At the moment, we're looking at about a 1% loss as we speak, because time decay is working quite well there. We've got a break even of $9.80. Okay, but ideally still looking for that bounce. But one of the few trades that hasn't really been hammered so much like the banking shares have. What else do we have on our recommendations? We've got BHP. Let's have a look at BHP. BHP, we're put protected at $34. You can see it's a fair bit below that at the moment. So, but having said that, even if it's at $30, it's not the risk isn't any greater. So, obviously looking for that bounce. So we did actually see iron ore move up in terms of positive news there, back above $80. It's at $80.24, which could be a little bit of a positive catalyst for it today potentially, and also help the Fortescue trade. Looking for a bounce up to $4, looking highly unlikely at this stage, but then again, looking back a month ago, we would have thought that it would drop about $1 in that same time frame. Okay, so about this time in September, we were looking at about $4, $4.20, and hitting $3.27 now. So $4 is our target, and it does need a solid run up in iron ore price. Maybe if we do hit $100 a tonne over the coming weeks, it has a solid bounce. Anything's possible. Now let's have a look at NAB. So NAB, what we did here was buy a put at $32.50 with an uncapped upside there. And the stock, look, you can see that there's actually quite a lot of green candlesticks, which indicates, we're seeing these sell-offs in the morning, and then the stock's running up there, except when it moved up to that $33 mark here. So a bit of bullish momentum, and you'd say they're the yield players coming in. They know that the bank yields are sitting around 6%, and cash rates actual cash rates at the bank seem to be dropping. The most you can get these days is about 3.5%. And with a solid drop in that capital price of NAB, you can see those some people coming in there, especially on this solid volume day here, where it where it moved down to 31.80 in the morning, and then had a very solid rally. That was the highest volume since for quite a few months there, as you can see. So that trade doing nicely. We're obviously not making money. We need to see it move north of 32.50. But if we found a base as we have appear to have seen right now, then that looks promising, and that's also leading into its dividend next month. Okay, so that's NAB. What else? We entered AMP. AMP. Also with a put protection there at 5.25. It's actually just gone below that, but it is hanging around that longer term support. As we can see, the share price has bounced from those levels a few times before, and hopefully can do so again today. But even if it does have a bit more of a drop downwards, we do have that capital protection at 5.25, so still looking for that uncapped profit potential back towards 5.50 and beyond. Right, let's have a look at the spread trades. What did we enter? We entered XJO back in XJO last week. This was on Friday. Our analysts found a bounce potential there, and looking at this breakout, which we started to see a bit of a breakout above 5.25. We've obviously moved back below that, but the good thing there is that we've been able to buy some of these calls at a much discounted level. But you can see that correction from the highs there right down to where we are now. And we're expecting another 30, I think it's 38 points down on the SPY, with the Dow Jones closing down another 115 points on Friday night's trade. We've got the SPY down 38 this morning, so expecting a bit of a further sell-off there in the market. And so anyone that's late coming into the XJO trade can do so at a much cheaper price. In fact, whilst we had a limit of 60 points on that trade on Friday, I think the most anyone actually paid was about 53 to 54, which is obviously good for the limited risk nature of the trade. What else do we have? XJO Telstra. Telstra's been holding up well. It's we've actually got a small profit on this trade. The stock has been running sideways. It was in a bigger profit midweek, but pulling back to that sort of 5.31 mark where we entered a week ago has allowed it to move back to break even intraday, and then move back into a small profit there, about 2.5%. So that's the 5.31 October's. Obviously, TimeK working well there, and the $5 for December. That trade's actually in a pretty nice position where it is. So we can ideally just look to see the stock staying around where it is come October expiry, and depending on the profit size, we can either lock in the profit then, or more likely roll into a November and ideally capture a bit more upside, which will improve the profit potential. Also, we've got CBA. CBA has been it's been hanging in there. It's been hanging in there. We've got the 78 to 80 spread, and we've seen it move quite close to 78 a couple of times. You can see that the stock has had these solid $1, $1.20 gains every now and then. We're back to around that 75 support, but it's kind of like the NAB chart. We haven't gone as low as what we've seen about a week or so. Some of the more energy stocks have really taken over the drop in the share price there. So that movement back up to 78 still not out of touch at this stage. Okay. We're looking. We've got a break even of 78.63 on that trade. So get past all this doom and gloom, a couple of days bounce, and and then we'll be laughing. Alright, that wraps up the trades there. You can see a little bit of shift in strategy there, focusing more, not so much on cover calls, which do still have a fair risk to the downside, and also the annoyance of being stopped out. We're focusing more on protected strategies there, so we can cover our bottom line, but also capitalise better on a bounce. With our spreads, I suppose the challenge there with spreads is because the whipsawing action on the market is such, very, very difficult to trade with stop losses. In fact, anyone trading with stop losses at the moment would have probably been whipped out. So again, focusing on strategies like the bought call or bought put, where you have one leg, you can get in and out fairly quickly and without having to be stopped out from whipping action. So just a small change of strategy there, just to tweak it and ideally look at to get more profits on the board. Right, if you have any questions, ladies and gents, you know where to find us. Feel free to give us a call. More than happy to help you with any questions you have. Thank you for your time, and we'll talk again next week.